Welcome back to the show. One of the things we love to talk about here is money, but nobody likes to pay more for the necessities in life. But unfortunately, inflation continues to do so. So now add on top of that the fact that we are in a pandemic. What is that doing to the prices of our goods? Well, luckily, we've got somebody here to break it all down for us. CTV's chief financial commentator, Pattie Lovett-Reid, is here with all of your money answers. Great to see you, Pattie.
Good to see both of you. Thank you for having me.
So, Patty, overall, the inflation rate so far this year is relatively low at only 0.1%. But if you look at specific categories measured in what's called the Consumer Price Index, it's a really mixed bag of what's up and what's down. So let's talk about what exactly is costing more.
Okay, so inflation, we don't have inflation at all at 0.1%, but some things cost a little more. So I'll throw it out there. Food. We know that when we go to the grocer, we're paying more. We're paying more for shelter, depending on where you live. Healthcare, personal products, alcohol, cannabis. All you need to think about is what was I spending money on during the pandemic? And you see the costs are starting to go higher because inflation is all about supply and demand. And when there's demand, prices go higher.
Okay, let's dive into some of those bits there that we saw on that board. Food,
Sure.
grocery store items, that's the areas where we're seeing those biggest jumps in prices on really certain items. So let's talk about where that is that the biggest jumps are rising. And also, do we expect prices to continue to go up at the grocery store?
Well, my greatest fear is that there is a second wave of COVID-19. And if that's the case, and I'm already starting to see it, people are stockpiling, again, back to supply and demand. But there's also production, process, distribution. Things get interrupted in the supply chain. And as a result, things like beef, yogurt, cheese. You can see the products there that are listed, carrots, onions, some vegetables. Things start to go higher. What you also see is that when store shelves are starting to get more and more empty, it doesn't mean they can replenish them as quickly. And so even though our frontline workers, they were there, people would still complain about the fact that when they got there, the procedures that were being put into place were costing more at the grocer, call it the head office, and that gets translated into higher prices as well. And so, yeah, I suspect these things are going to continue to move higher in the fall.
But if we go back to that consumer price index, there are actually a few things that are costing less now. So what are those things and why are they costing less?
Because we're simply not utilizing them. Think about transportation, airlines, recreation, areas where we would spend money in the past, even on clothing. What I have found during the pandemic and speaking to people is they realize they don't need as much stuff. They just don't. And so they're not out there spending. They're thinking they're going to do things differently. I can also tell you that when you think about real estate, luxury condos, they're down. Where are you seeing prices increase? Recreational property, detached homes. During the first wave of the pandemic, people found that they needed more space. They wanted more space. They weren't traveling. They were redirecting their money. And so where they're spending their money, the prices go higher.
Let's now talk about inflation over time. I don't think maybe people of a certain generation have ever experienced a meteoric rise, that really sharp increase in inflation. Is this
Right.
something that anybody needs to worry about, at least right now?
No, I don't think so. My greatest fear is deflation. That's when prices continue to fall. And the reason for that, Mel, is that why would I buy something today if I think it's going to be cheaper tomorrow or it's going to be cheaper the day after
Mm.
that? And the economy, we need people out there who can afford to continue to spend. And so I don't see it taking off anytime soon. I know the central bank would love to see inflation around 2%. I'd like to see inflation start to go a little higher because that means the economy is working the way it should be.
And you've been saying, Patty, that inflation can be a good thing. How so?
Because it just allows enough prices to move higher. In some cases, as prices go higher, inflation takes off a bit. You have individuals such as seniors, for example, who may be getting pension benefits that are indexed to inflation. You get higher interest rates, and that would help people, for example, who are sitting in cash and they're earning next to nothing. And maybe as prices start to go higher, you get a raise yourself, And that makes servicing your loans, your mortgages, just that much easier. Heck, it even helps the government service their debt a little easier. When we're in a low interest rate environment, that's okay. But when rates start to go higher or taxes go higher, that means more revenue for the government. So you kind of put it all together. A little bit of inflation can be a really good thing for the economy.
Okay, that's the economy. Let's talk about nuts and bolts here. If prices do go up due to inflation, who else benefits from that?
Well, as I was sort of kind of alluding to, maybe the seniors who are getting old age security and CPP, things that are tied to inflation. I've spoken to so many who have been sitting in cash, and as a result, they're getting next to nothing. And depending on who you are and just how much money you may have, you may not feel comfortable being in the market with all the volatility that's associated with it. So they're really struggling because when you sit in a savings account after taxes and inflation, you're often losing money. So you could see those rates start to go a little higher. And as I just mentioned, helping to service your loan and mortgage, if you get a raise, that's great. We have heard of so many people who have maybe had their salaries pulled back or their salaries frozen during the pandemic because there's just been no need to actually raise them. And that can be a struggle for families as well.
Pattie, our government has racked up over $1 trillion in debt now, in part from fighting COVID-19. So do you think that inflation is going to be one way that leads us out of the red?
That's a great question. I'm certainly hoping that it's one of the things that does it, because when we start to see the economy pick up, tax revenues, tax dollars start to come in. And that, of course, can be applied against the deficit, which is a big number. There's no question about it. But I think very few would actually argue that the government didn't need to step in the way they did with the aid programs that they've had to do, but they can't last forever. It's not sustainable forever. So while we're in a low interest rate environment, the government, just like households, can service this debt. But in time, they'd like to see things go higher. Their tax revenues go higher. We pay more, and we take that debt down, that deficit down.
Okay, so for somebody who's watching, who's like, we're watching what's happening right now in the economy. We've got a big ticket purchase we're thinking about making. Should they do it now or should they wait?
If you have the money and the resources and you know that you can afford it, I would say go ahead and do it. We know that this recovery is going to be bumpy. It's going to be uneven. We don't really know what the whole fall is going to bring in terms of a potential lockdown. And we're seeing people starting to stockpile. I'm not saying go out and stockpile, but if you can afford to go out and spend and support the economy, do so. I've suggested in our household, we're going to try a little bit.
Pattie, it's always a pleasure to see you. Thank you so much for being here today.
Thanks for having me.
Don't go anywhere. We'll be right back.